Welcome back. Hope audible. Hope the discussions are loud and clear, I believe. Yes, a few of you gave thumbs up. I presume things are going smooth at your end. Post discussion on place of supply. We will make our basic discussion on input tax credit. As far as a topic like input tax credit is concerned, it starts with section 17 of your CGST Act, ends with section 21 of CGST Act, and also we have 35, 36 to 45. Rule 36 to 45 discuss about 21, this 5 sections. What will be the takeaway of this topic? The takeaway of this topic will be, in case of your services, input tax, in case of input tax credit, who will be eligible to claim input tax credit? What are the conditions that are placed for taking input tax credit? Input tax credit means what? And in case a person is engaged in both taxable and exempted supply, how input tax credit need to be how input tax credit need to be availed. Position levy scheme where he can't avail input tax credit. Now he moves into normal levy where he can avail input tax credit. Or earlier they were doing or supplying, manufacturing or supplying exempted goods, so they are not eligible to take credit. Now they turn out to be now the goods turn out to be taxable goods, they are eligible to take credit. Something special circumstance. In case of job work, how to handle input tax credit. In case of input service distributor, how to handle input tax credit. By and large, that will be the discussion in input tax credit. One of your prominent topic from CAfinal, CMA final, CSfinal, solid questions we have from an exam perspective on this topic. CAfinal at all, we have a solid 8-mark question here. CMA final, solid 12 marks. 12 marks is this topic. And see discussion in next session also. Point that we want to drive home here is, in case of your in case of input tax credit, a very important topic is this topic. Okay. So I could able to find some challenges that some of you are all facing. I would, as usual, recommend go back to 2-3 minutes later and view it from there, so that you will not have buffering issues associated with it, which you all know by this time. Now, coming back here, getting into some definitions, the services, capital goods, these definitions are important. My network issue. In case of input tax is concerned, input tax in relation to a taxable person will be IGST, CGST, SGST, which are all availed on goods or services. And it also includes tax payable under reverse charge mechanism or payable under reverse charge mechanism. And it excludes only all those tax paid under composition levy. So a tax paid under section 10 will not be treated or is not considered as input tax credit. However, our regular CGST, SGST, IGST, UTGST, all this will be considered as input tax credit. From CS perspective, under GST compensation cess, GST compensation cess is eligible as an input tax credit. If you're going to pay GST compensation cess, then you can claim credit of GST compensation cess. If a company is going to sell cigarettes, then they will pay GST compensation cess at the time of purchase of cigarette. Similarly, same GST compensation cess, they can use it at the time of selling. So when they sell also, they are liable to pay GST compensation cess. This is applicable for aerated drinks or your motor vehicle, all this stuff. So coming back here, input tax credit means it can be a credit of CGST, SGST, IGST, UPGST. That's all. Or all these taxes paid under reverse charge, payable under reverse charge mechanism. It will not include all those tax paid under composition. So this sums up your discussion relating to input tax credit. Moving forward, to start with section 16, I decided to proceed in the chronological order of your section. Somehow it is very well placed. Section 16, which talks about eligibility for taking credit. 17 talks about your apportionment. 20 and 21 talks of your ISD, input service distributor. So we will proceed in the almost same chronological order. We will not disturb the order. As far as section 16 is concerned, section 16(1), first to claim input tax. So point that I want to drive home here is every registered person is eligible to take credit. So for taking credit, one of the prerequisites is that person has to be a registered person under section 22 or 24 of CGST. Let me repeat it. This is the place where you can even distinguish between the word taxable person and registered person. Taxable person means a person, let me repeat, taxable person means a person who is, a taxable person means a person who is liable to get himself registered. Registered person means a person who is registered already. He has a registration certificate and he has a valid GST number. So a person who has a GST registered certificate and a valid GST number, that person alone is eligible to claim input tax. Apart from that person, nobody would be entitled to claim input tax credit. Followed by, in case of your input tax credit, apart from ITC on supply of goods or services, this ITC can be availed by a registered person on what? On all goods, all services which are used or intended to be used in the course or furtherance of business. I think we already discussed about the word business, and that goods or services is eligible for ITC if it is, look at that wording, used or intended to be used. If something is used or intended to be used in the course of furtherance of business, then yes, it would be eligible for input tax credit, any goods, any services. Used or intended to be used in the course or for joint reading between section 17 and section 16, someone can additionally say that person who want to claim credit should be engaged in taxable supply and manufacturer goods, which is exempted. Milk, exempted. You sell branded milk, you sell unbranded milk, all milk exempted. So, organization which make milk, they will not be entitled to claim ITC on goods that are directly used for making for the furtherance of business. It should be used or intended to be used for furtherance of business. So it can be active use, passive use, all kind of use. And that should be used for effecting a taxable supply. The taxable supply in would be entitled to claim input tax credit. Otherwise, I would not be entitled to claim input tax credit. Followed by, are there any conditions for availment of input tax credit? If we go and discuss that point, yes, we have certain conditions. Section 16, subsection 2 of CGST Act comes and places on record some 4 conditions. Mandatory conditions. If these 4 conditions are satisfied, or all the 4 conditions are satisfied, then only a person is eligible to claim input tax credit. Even if he failed to satisfy one condition, he will not be entitled to satisfy all 4 conditions, at least that are listed down here. Of course, there are some other conditions, but major prime condition A, B, C, D will be listed there. 16 to A, 16 to B, C, D. I'm not pushing you so much. Stop at 16. Final cannot stop at 16. So you have to stop at 16 too. But for a very deep knowledge, 16 to A, 16 to B, C, D. First condition. The supplier should be in possession of tax invoice, debit note, or a document based on which he can claim input tax credit. The supplier should be in possession of document, first condition. Second, he should have received the goods or received the services. Sometimes what happens is, as per the instruction of the recipient, as per the instruction of the recipient of goods or recipient of services, the goods goes to another person, or the services are consumed by another person that the supplier has received the goods. Network. Sometimes what happens is, the supplier, the law simply will say supplier should receive the goods, supplier should receive the services. See, majority of the cases, supplier only will receive the goods. Supplier of goods only will receive the goods, which is used by him. So, the goods or services should be received by him. He receives the goods. He receiving the goods. Now, our crux discussion is the person who is in possession of those invoices, debit notes, he has also received the goods or received the services, and the supplier, let me repeat, the supplier from whom they procured the goods, their supplier has paid the taxes to the government. So you should think you are a recipient of goods when it comes to input tax discussion and condition satisfaction. You are a supplier providing outward supply. For providing your outward supply, you receive some inputs, inward supply. That inward supply may be goods, that inward supply may be services. The inward supply of goods, inward supply of services, this goods or services, where the recipient should be in possession of valid documents, he should have to the government, and fourth, the recipient, which is otherwise called as the supplier for our discussion, the recipient received the goods, who received the services, is eligible to take input tax credit. If a supplier has satisfied this 4 conditions, received the original copy of documents, received the goods or services, the person from whom he procured has paid the tax to government, followed by supplier has disclosed in his return 3B or 1 or GSTR 3B or 2 as the case may be. Now, When he satisfy all these four conditions, then the respective supplier is eligible to claim input tax credit. So, four conditions: valid documents, 2, received goods or services, 3, from whom he has procured, that person has paid tax, 4, he has disclosed in his GST return. If all four are satisfied, the respective person is eligible to pay. Sir, I am not satisfied one condition, I have not satisfied two conditions. I have valid document, I have paid money to the recipient, paid money to my supplier. My supplier also supplied the goods, and I have also filed my return. However, my supplier, look at the wording, from person from whom I bought the goods. No, that fellow has not paid tax to government. Am I eligible to take credit? Answer is no. No. Why? Because the condition is not satisfied. Law says the person from whom we procure goods, the other party should pay tax. I think you can say, no, I pay tax. No, how you can predict my rate? Section is very clear. Now we also had an amendment. See, subject to section 41, subject to section 43A. Section 41 says whatever credit availed by the supplier, all credits are temporary until it is confirmed by officer. 43A goes one step forward and says government can restrict a person from taking credit. There are standard restrictions for this. One of the restriction, when you couple this with your rule, which we will discuss sometime later, when you read it and say there is a restriction, unless and otherwise other person does not pay, I am sorry, who cannot take credit? The respective recipient of goods does not take credit. Now, we'll take up some example. The invoice was received by the supplier on 5/4/20. The goods were removed from the factory, and 5/5/2020 goods reached. 5/5/2020 invoice reached. Okay, but what never reached? Goods reached. Goods was reached only on 8/4/2020. Now, the question before you is: you have 3 dates in your hand. 3/4/2020. Sorry, not 3/4. 4/4/2020, the day in which invoice is raised. 5/4/2020, the day in which original copy of the invoice is received by in your hand based on courier or some mail. 8/4/2020, actually the goods comes. Actually the goods comes on 8/4/2020. When a person is eligible to claim input tax credit. When you go back and analyze, law comfortably say I can claim credit only on 8/4/2020 because on that day only I have received the goods, subject to a assumption that other conditions are satisfied. Other condition here refer to the person from whom we procure the goods, that party has paid tax to government, and the respective supplier will disclose in his return. These are all subsequent satisfaction. Assuming that is satisfied, I can take credit on receipt of goods. I can take credit on receipt of services. Can we move forward? Yes. In case of section 16.2, there are some proviso which comes out and discuss some exceptional discussion. In case goods comes on lot basis. Sometimes goods comes on lot basis. What do we mean by lot basis? See, one goods only, but will go in 4 consignment. It could be a boiler, it could be a windmill, it could be your heat exchanger, it could be your some chimney. All these items will go on lots. First lot, second lot, third lot. Now a doubt came when the recipient can claim credit, for which the proviso to section 16.2, first proviso to section 16.2 comes out and says the recipient is eligible to take credit on receipt of last lot. ask the question, when you received the last lot. Sir, I received the last lot on let's say a particular day, a last day. Then that day they are eligible to take. Maybe I will say share like this. Lot 1 came on 24 to 2020, 18/3/2020. When he can avail ITC? Receipt of lot 1, which is 24/2, or a receipt of lot 2, which is 10/3, or 18/3. He would be entitled to claim ITC on 18/3/2020. Moving forward, exactly from here, the second proviso to section 16(2) comes out and says, every supplier who has purchased goods from another person, or every supplier who has received goods or services on inward supply, he has to ensure that that supplier shall pay to the third person within 180 days from the date of invoice. Kindly make a note here. He has to make a payment within 180 days. Within 180 days from date of invoice, payment has to be made. Sir, I am not able to get you. Very simple point. A Limited purchased some raw material from B Limited. A Limited purchased raw material on 2010-2019. Sorry. A Limited received the raw material on 2010-2019. Actually, the invoice was dated 15/10/2019. See, invoice will be raised, goods will move on transit, and then goods reaches, and they will take credit on the based on receipt of goods, receipt of document, all satisfaction of condition. So, invoice was dated 15/10/2019, not 2020. Sorry, invoice was dated 15/10/2019. Goods was received on 2010-2019, and the law says on receipt of the goods and having a valid invoice, you are eligible to take credit, but ensure the payment to B Limited, who is the supplier of those goods for A Limited. B Limited has supplied to A Limited. A Limited has purchased goods. B Limited has to be paid by A Limited within 180 days from date of invoice. From the date of invoice made within 180 days. That is, the recipient of goods or service, A Limited, has to make payment to the supplier, B Limited. Because B Limited only supplied goods. A Limited received the goods. The recipient has to make sure the payment as it is. If they don't satisfy, what would happen? Nothing will happen. ITC availed by the person has to be reversed. Section 16, subsection 2, second proviso will come out and say that in case a payment is not made within 180 days, then ITC availed by the person to the extent of amount due in case partly paid. If nothing is paid, the entire ITC need to be reversed. It is only simply need to be reversed if you are asking me. No, Rule 37 proposes, Rule 37 proposes an interest on this. A little more detail on this. When we go to respective rule, we will discuss. For the time being, understand payment need to be made within 180 days. Next discussion. Section 16, subsection 3 comes out and says, whenever a person purchase capital goods. Whenever a person purchase capital goods. And on that capital goods, if he is on the ITC portion, can we able to appreciate this discussion? He is going to claim depreciation benefit on the input tax credit portion. Input tax credit portion means the tax amount. If he is going to claim depreciation on the tax amount, then he is not entitled to claim input tax credit. No. I will claim input tax credit if a person says as either depreciation or ITC. That is how people will understand. No. Law does not word it in that way. Carefully note here, value of asset is 10 lakhs. GST paid on the asset is lakh and 20,000. So, total value of asset 11 lakh 20,000. Now, as per section 42 of Income Tax Act, on the value of capital asset, you are if it is put to use within 180 days, though there and all, don't ask me beyond that. Okay, there put to use, you are eligible to claim depreciation. Now, on what value? On the capital asset value. What is the value of capital asset? Is it 10 lakh or 10 lakh plus GST 1 lakh 20,000, which equal to 11 lakh 20,000. If in case a person is going to calculate depreciation on 11 lakh 20,000, on 11 lakh 20,000, which means what? Including GST. If a person calculate on 11 lakh 20,000, then law simply says he is not eligible to claim input tax credit. To the contrary, he claimed depreciation only on tax credit. End discussion is the tax amount of a capital asset has a mutual exclusivity, meaning thereby either you can claim ITC or you can claim depreciation. Tax amount, I was very clear on my word. Tax amount of capital goods, tax amount of plant and machinery. Either you claim option one is what? Either you claim depreciation on the tax amount. No, depreciation will not be big beneficial. If I claim ITC only, it will be more beneficial. Then claim 32 of Income Tax Act and section 16(3) mutual exclusivity will get discussed. Now, moving forward, availing input tax credit. Let me repeat, I am very careful on my word. The time limit for availment of input tax credit. Often people misunderstood here. That is the time within which I have to use my credit. Actually, law has not discussed about the time limit for utilization of credit. Otherwise, when you go to payment of taxes, you will be aware of it. For a moment, think that ledger is a ledger that will allow you to claim credit. If a credit is taken in electronic credit ledger, it is treated as availment. When a credit is availed, that is sufficient. When it can be used in the same month, next year, 3 years later, 5 years later, 7 years, infinity. Or company A may be merged with company B and company B might use it. See, I'm not getting into how it can be utilized. But the careful discussion here is when it comes to your when it comes to your time limit stops with availment of input tax. Time limit simply stops with availment of input tax credit. Within what time I have to take credit? Do I have a time limit? Yes. Input tax credit generally will be taken when condition section 16(2), whatever we discuss, all are satisfied, immediately will be taken. See, sometime what happens is rarely one invoice will be missed. Rarely one document will be left over. Rarely there will be some doubt whether to take credit, not to take credit, because a lot of disputes are there. New law, different views are there. Often I would say this view is as of today's discussion and today's learning. If some of you have a different view, you are freely allowed to have a different view. I would not say my view is final, because this is a law. That court is going to be the apex court in that discussion or that type of discussion. Maybe we can firm up our thoughts. Until that time, we have to be open-ended. Maybe a view like this is possible. Yes, welcome that view. Maybe another view is also possible. So, as the law is on a very insane stage or very nascent stage, or the law is being super, then yes, it would be possible. Point here is, in case of section 16(4), the law simply comes out and says that time limit, as per section 16(4), that time limit for availing ITC will be for an invoice missed out, for document credit, whether doubt to avail credit is there or not there, or for any other reason. I'm not getting into your reason. The time limit to take credit is before filing of September month return of subsequent financial year, before filing of September month return of subsequent financial year, or filing of annual return of these two, whichever is earlier. Let me repeat. Before the due date of filing September return of subsequent financial year. 1920, an invoice of 1920 got missed. What is the last date to take credit? Before 30th September 2019. That is September month return. September month return, generally due date of September month return falls on next month, October 20th. Claim credit before October 20th of, for 1920, before October 20th October of 2020, or filing of annual return of this two, whichever is earlier. See, generally annual return due date is 31st December. So if some people over enthusiastically before the December due date, they filed on 31st August itself, assume. See, assumption. Nobody has filed 1819 itself. Okay, now you are in 1920. You completed 1920, now you are in 2021. Okay, so for the financial year 1920 itself, 1819 itself, annual return is not filed. 1718 only filed. So don't be bothered and all. These are all pakka theoretical discussion. When it comes to practice, the whole game will be different. Okay, so point here is, in case of your last date of subsequent financial year, return filing due date. Return filing due date of subsequent financial year, month of September, which is what? For 1920, before October 20th, 2020, or filing of annual return of this to August itself. Nobody will file, assume theoretically. 31st August itself, they have filed the annual return. Then the last day to take credit stops at 31st August 2020 for the financial year 1920. Sir, annual return is not filed. Then the last day to take credit stops at 20th October 2020. Sir, how you told to 20th October? Let me repeat it. I never told 20th October. Law says the return filing due date of September month. September month return filing due date is generally what? October 20th. When we go to section 39, we will know October 20th. However, commissioner have power to extend due date. For example, in Tamil Nadu or southern states and all, due date is increased to 22nd. We will not break our head in a very great way. We'll stop here. 16(4), time limit will be before subsequent financial year, September month filing return, or filing of annual return of this two, whichever is This sums up your section 16, which talks about conditions for taking credit, or what are the conditions which need to be satisfied at the time of availment of input tax credit, and who can avail input tax credit. As far as section 16 is concerned, two rules need to be discussed for the purpose of section 16. Rule 36 and Rule 37. Rule 36 talks about document based on which input tax credit can be availed. I think you all know tax invoice, reverse charge invoice, otherwise called as self invoice, or bill of entry in case of imported goods, or input service distributor invoice. Based on these invoices, yes, a person is eligible to take input tax credit. The ITC availed by that person can be availed if and only if he files those information in particulars specified in this rule are being obtained and the person has filed a form GSTR 2. I do understand a lot of us will ask, sir, we have dispensed with GSTR 2. No, correct. We have dispensed with GSTR 2. That, however, the rule was originally worded like this. They are still continuing in that same fashion. And almost to note here, if there are any minor lacunas, some minor information is not there, or any other document is there but contain details of GST and place of for taking credit. Let me repeat it. Though legal document for taking credit is what? Your invoice, debit note, or bill of entry. If a document has some informations like this, where all information is there, but it is not a tax invoice or a debit note or a bill of entry, then law allows maybe that the document also may be considered for the purpose of taking credit. That understand that is a discretionary power given to a GST officer, followed by, in case any person is involved in any kind of fraud under section 74, under section 129 or 130. At a later part of discussion also, you will discuss about it. If any person is involved in fraud, because of that some ITC is availed, then that ITC need to be reversed. That ITC is not eligible. That person is not eligible to claim input tax credit. The most crucial discussion is this discussion. Rule 36, sub-rule 4. Amended from 1st October 2019, only applicable from this attempt onwards. See, ITC earlier can be availed simply based on documents. However, other conditions are all there. Now, a further condition is being placed. A person is eligible to claim input tax credit provided he has possession of document, he has received the goods, his supplier has updated that information in the GST side, and that also comes and sits in form GSTR 2A of the recipient. Supplier will file form GSTR 1, supplier of the goods or services. Recipient will get that information in 2A. Then they call it as matched credit and the person is eligible to claim credit. In case the supplier has received the goods, supplier has paid the payment, supplier has a valid document, but the person from whom he bought, no, that person has not filed the return, possible, not filed the return, then the law says you can take credit only 10% of what is appearing in your GSTR 2A. So suddenly where from GSTR 2A came? I'm sure you all know. Otherwise, when you go to return, you will read about it. Form GSTR 2A is the auto draft return. Inward supply will contain. Here also they use the word carefully. 10% of eligible credit. See, originally it was 20%. In March, they amended to 10%. So there is again in amendment, another amendment. So in my view, Rule 36(4) will be little important. Sir, what you are trying to say, sir? In layman's language, you have bills and goods received for rupees 1 lakh ITs. However, what got reflected in your 2A, that is, it should come and sit in supplier's inward supply form, no, 2A. What got reflected is only 80,000. Sir, I have 1 lakh creditor, but only 80,000 came. Meaning that by one supplier from whom you purchased for 20,000 rupees, he has not updated. You can call and say him, but by the time month will come, you have to close it. Law says, because 80,000 only came and you have bills for rupees 1 lakh, on this 80,000, all 80,000 are eligible credit. So on that 80,000, ad hoc take 10%. Meaning thereby he can take maximum of 88,000 credit. He cannot take more than what? 88%. So if I take, what will happen? It will be treated as ineligible credit. That's all. 6.4 was one of the hidden entry. It from October 2008, 19, it is killing people. And a very recent relaxation also came. That and all is applicable now only. Yesterday, day before yesterday, some notification came. Don't be bothered about it. Friday, some notification came. That and all is not relevant for this exam. That and all is relevant only for next exam. Point here for this is in case of 36.4. I have invoice for 1 lakh, but however, my 2A has only 80,000. Of that 80,000, 5,000 is ineligible credit. Sir, what is ineligible credit, sir? Later you will learn section 17.5. Outdoor catering, motor vehicle, this, that, and all. Ineligible credit, 5,000. Then your eligible credit is how much? 75,000 only. 75,000 into 10%, you are eligible to take credit, which is 75,000 plus 7,500, 82,500 I can take credit. Sir, however, I have 1 lakh rupee bill. I am sorry, 36.4 very particularly. This is about your 36.4. Can we move forward? Done? Yes. Available. In case of non-payment to the supplier from whom we have procured the goods within 180 days. I think we saw earlier 16 to its second provision. That is, payment need to be made within 180 days. So one of the conditions is payment need to be made within 180 days. Payment will be made within 180 days, no issues. In case for various reasons, see, in any genuine business transaction, within 180 days, everybody will make payment. Leave COVID-19 issues and all that and all exceptional transaction. Now, the business itself will, to revive the business, to get back to business, getting back to stream, all will have its own challenges. See, everybody is going to have challenges. It is not you, it is not me, it is not every individual is going to have their own set of pocket and sizes of challenges. Okay. Only challenges any case going to be faced by everybody sitting here. Now, point for our discussion is in case of general payments, regular payment, when I procure a goods, when I procure a services, it is an underlying discussion that the payment for the goods, payment for the services has to be made within 180 days. I received the goods, made payment within 180 days. I received the services, made a payment within 180 days. Beautiful. Let me repeat, beautiful. Then what will happen? Nothing will happen. Matter instant. Meaning there will be proportionately payment made. Partly payment made. Then a proportion of credit or a part credit that need to be reversed if payment is not made within 180 days. Agreed, sir. I will reverse that ITC. Reversal alone is not mandatory. Reversal, you can say, or it will be added back to your output tax liability. All are synonymous word. You are going to add it to your output tax liability and pay in the next month is equal to reversing your eligible credit. Both are synonymous. Old law used the word reversal. GST uses a word, it will be added to output tax liability. However, crux important is this. Though I am going to reverse the amount, Law says interest will be applicable as per section 50. The rate of interest will be 18%. And it will be calculated from the day in which I took credit till the day in which I have paid the tax or reverse the tax. Day in which I took credit, what? Day 10, day 20, invoice comes. Then I take credit from that day till the day in which I reverse. For that number of days, I am liable to pay what? Interest will be an important, which we have already had earlier exam also. Sir, I have not paid within 180 days. So he asked me to reverse the credit. I reversed the credit. He asked also me to pay interest. Okay, I also paid interest. Now, on 286 paid, am I eligible to claim? Am I eligible to claim input tax credit now? Answer is yes. There is no time limit for reclaiming, re-availing the credit already reversed. If you have reversed the credit because payment is not made, taking credit, you don't have a time limit. Are you able to understand? This rule 37 now will straight away contradict your 16.4. For reclaiming, I am not entitled. For reclaiming, I don't have a time limit to take credit. Let me repeat it. From inter perspective, earlier level discussion, these points are all not much relevant. But from a final perspective, that differences is required. 17.4 will hit where? 37. 37, if you carefully note, 37 is saying there is no time limit for reclaiming the credit. True. Can we move forward? This completely comes to a conclusion of your section 16 read along with rule 36 and 37. Can we move forward? As far as section 17 is concerned, section 17 has 6 subsections. The most popular section is 17.5. All of us know because this is about blocked credit. But also under C is used for both business purpose as well as other than business purpose. Then ITC would be eligible only to the extent of business purpose. See, I think already we discussed. ITC can be claimed only on input tax credit can be claimed only on 3 taxes: CGST, SGST, SGST or UTGST or IGST. ITC, input tax credit itself, can be taken only on 3 type of items, means all those goods other than capital goods. Capital goods means goods which are capitalized by the assessee in his books of accounts is called as capital goods. Input services means any services. So, a careful discussion here is, as far as section 17 is concerned, in case of section 17, if a goods or a service commonly used, look at that word, commonly used for both business purpose and other than business purpose, ITC would be eligible only to the extent of business purpose. If an input tax credit exclusively used for other than business purpose, then straight away ITC not eligible. If a goods or service is used exclusively for business purpose, then ITC is eligible. So I don't think so. In both extremes, you will have problem. Exclusively for business purpose, ITC fully eligible. Exclusively for other than business, ITC not eligible. Problem is in between fellows. So the problem here is IT. There is a goods, there is a service. It is partly for business purpose, partly for other than business purpose. In this case, how input tax credit need to be availed? For which the section says it will be eligible only to the extent of business purpose. What quantum eligible will be determined as per ITC rules. So you have rules. Rule 42 and 43 will come out and discuss about to what extent you are eligible for input tax credit in case if it is partly used for business and partly for other than business. Similarly, in case of sometime goods or services used for effecting both taxable supply as well as exempted supply. Now, take a situation. There is a goods commonly used for both taxable supply and exempted supply. Then, am I entitled for full ITC? Now, a question that comes up here is, are you eligible for full ITC? Before that, I'll answer one point. Just construct a small structural framework. There is a taxable goods, there is an exempted goods. These both are done by one company. A goods, a services, a capital goods, directly used for taxable goods. A goods, a service, a capital goods, directly for exempted goods. Directly for capital goods, eligible for ITC. Directly for exempted goods, not eligible for ITC. Understood? Say, taxable and exempted goods. Input, service, capital goods. Commonly used for both taxable and exempted goods. Then, proportionately, ITC is eligible. To what proportion ITC is eligible? To the proportion of taxable goods. To what proportion ITC is ineligible? To the proportion of exempted goods. Exempted goods includes non-tax. Discussion is very simple. Any goods, any services used for both taxable and zero rated supply, ITC is eligible. If any goods is used for both exempted and non-taxable supply, ITC is not eligible. To that portion, ITC is not eligible. So this is how it has to be constructed. Here, section 17.3 comes out and discuss about value of exempted supply. For the purpose of value of exempted supply, for this purpose, for the purpose of ITC valuation of exempted supply, it says exempted supply will include non-taxable supply also. It excludes all those transactions that are covered under Schedule 3. However, sale of land, sale of buildings, sale of securities will be included for the purpose of value as per ITC. See, normally sale of building, sale of land and all is a non-taxable supply. It will not form part of your exempted supply because it is covered in Schedule 3 transaction. So carefully they excluded Schedule 3 transaction. All Schedule 3 transactions are excluded except 3 transactions, which is going to be securities, land and building. That value will form part of your value of exempted supply. If the company says I manufacture exempted goods 25 lakhs, I manufacture taxable goods 75 lakhs, we also sold land for 20 lakhs, then you cannot neglect it or Schedule 3 transaction. No. Sale of land will form part of your value of exempted supply. So, to that extent, your denominator and numerator will get increased by value of land, value of building, and sale of securities. To come back here, how to determine this proportionate amount? See, for which Rule 42 and Rule 43 is mentioned in ITC rules. One of the tricky rules, let me repeat. I'm not sending any signals that it is very tough, difficult, all that stuff and all. But come on, understand, it requires a lot of time to get convinced, lot of efforts to understand it in a very, very, very comfortable way. I'll share my understanding. Be with me on the understanding. Okay. I have just presented a very point. Okay. In fact, I have never given many points in Rule 42 because if I'll start giving it, that discussion itself will go for 45 minutes. I start having an afraid. I just gave you only what is relevant. If you happen to see my presentation, crisp of Rule 42 is given. Normally, in my regular presentation, it will be about 8 slides means. I have just shared you only one slide of this presentation. Now, I would recommend you to see the presentation. As per Rule 42, it very clearly says, first it want to determine a credit which is exclusively used for taxable supply, commonly used for both taxable supply and exempted supply. That is to say, assume everything as what T1 talks of other than business purpose. T2 talks of ineligible ITC as per section 75, which we will learn. T3 talks of exclusively used for exempted supply. In nutshell, this verbatim 3 items. ITC is not eligible. So, from my total credit, reduce this 3. You will have one balance. That balance includes what? Common for taxable and exempted, and exclusively for what? Taxable. Yes or no? From C1, reduce T4. What is T4? Exclusively for taxable supply. Yes, sir, I reduced. I have a number that is called as C2. Technically, C2 becomes your common credit. So, E divided by F into C2. E by F means what, sir? Exempted turnover, exempted supply for the tax period divided by total supply for the tax period. Exempted supply will include only exempted portion. Total supply will include both taxable plus exempted portion. And that exempt value need to be determined as per 17.3. So, exempt supply that month 25 lakhs exempted supply plus 20 lakhs land sale. So, total 45. That month 100 lakhs turnover plus sale of land 20 lakhs, 120 lakhs. 45 by 100. You will get one number. Keep that number. That is the D1. Okay. Another calculation. The common credit may be used even for other than business purpose. So, common credit value, that is C2. You go back to C2. Common credit into flat to 5%. You will get common portion for other than exempted supply or other than business purpose. Common portion for other than business purpose, which is D2. Now, C2 common credit minus D1, D2. C2 common credit. C2 minus D1 plus D2. D1 is nothing but your common credit on account of exempted supply. D2 is nothing but your common credit on account of other than business purposes. Okay. Add this two number, that is the ineligible portion. Okay. From C2, if you reduce that number, balance number will be C3, which is the eligible common credit, or in other terms, D1 plus year end, do an annual calculation. All this number will become annual number. At the annual time, if you have excess reversed, reclaim the credit. If you have short reversed, pay along with interest. And this annual working has to be done before 30th September. In a regular class, we used to discuss this topic alone for 2 hours. Sir, is it so much required? Yes, my dear, it is so much required. So much of real estate sector, no change in the formula and all. Formula and all remains same. E by F, no. That we have used it as amount. Instead of amount, it will be a square carpet area square feet of carpet area. That is to say, 300 3,000 square feet he has pending out of his 10,000 square feet. Say 3,000 square feet he has pending out of his 10,000 square feet. Then ITC need to be reversed to the extent of 3,000 square feet. Because once flat is completed, after that whatever you sell, you are not liable for GST. When you are not liable for GST, proportionate ITC need to be reversed. So it will be calculated after completing the project. Two things. After completing the project, this Rule 42 reversal has to be done. In case of a construction company, same discussion, everything is same, but there you will not put for a month, you will not put for a year, you will put for a project. You will put for a project. When project, I'll calculate for a project, when the project is going to get completed, on the day you will do this. This sums up your Rule 42 discussions. Consciously, I'm restricting the Rule 42 discussion because beyond a point, it has to be illustrated in a more comfortable way through some sketches and through board. If you could able to understand at least a glimpse of it, at least some the crisp point of it, I think you are on track. Else, a little more homework is required. Maybe you can read through those texts which are all available in the material, institute study materials, or wherever you want to read it. Rule 43. Sir, already we discussed Rule 42. Now, why Rule 43? Very simple. Rule 42 is applicable only for your input and input services. That is to say, only for goods or services. Rule 43 is applicable for capital goods. So, you can have common input services, capital goods. So, common inputs, common raw material, common services means Rule 42. Capital goods means, common capital goods means Rule 43. Using the same packing mission, I pack paneer, I pack milk, I pack ghee, I pack curd. Milk and curd exempted. Ghee, paneer, taxable. Understood? Common capital goods. In case of common capital goods or common packing material, that is common common goods. Renting of the factory, common service. So common services and exclusively for personal purpose, throw away. Exclusively for exempted supply, throw away. If you remove, what you will be left over with? One credit. That credit will be exclusively for taxable supply and used for both taxable and exempted supply. Equate with your C1. C1 was a conscious elimination from total your credit, which consists of common credit plus exclusively for taxable supply. Here also you will get a credit consisting of common credit plus exclusively for taxable supply. This common credit plus exclusively for our taxable supply, from that arrive the portion of common credits. Can I arrive it? Yes, mission wise you can arrive. No, you have 5 missions. 3 missions is used for your taxable and exempted supply. So mission 1, mission 2, mission 3. All 3 missions, total credit will be treated as TC. Okay. Every mission is used for 60 months, 5 years. It's a deeming fiction of GST law. See, GST law, wherever possible, will say capital goods will be used for 5 years. Deemed. So, TC by 60, divided by 60. Value of asset is 1 lakh. So, GST is 18,000. 18,000 divided by 60 equal to a number you will get. Okay. That number, 18,000 divided by 60, why 60, sir? It is assumed you will use the asset for 5 years. You will get one number. I am assuming 1,500. You will get 1,500. If you get 1,500, then for that month, how much ITC need to be reversed? How much common ITC is 1,500. In this 1,500, one portion need to be reversed. What is that portion? Exempted portion. E by F into TM, actually we can say. But will you have only one mission or a collection of missions? Collection of missions. All the aggregate of all that missions, all the aggregate of TM equal to TR. Can you able to understand? If I have one mission, then TM equal to TR. If I have mission 1, mission 2, mission 3, mission 4, then TM1, TM2, TM3, TM4. Aggregate of all TM equal to TR. TR into E by F equal to a number you'll get. That money need to be reversed. Where E by F will be exempted supply by total supply. In case of real estate business, ongoing projects, at the end of the project, you will calculate where it will be E by F will be nothing but your area square feet. project area, carpet area, square foot. Okay. And most important point over here is you will not only reverse that amount, you will also pay interest for that amount from the date of taking credit till the date of payment or reversal. From the date of taking credit till the date of reversal. Sir, 15 months later, I reverse. Very simple. From the day 1 to month 15, ITC, sorry, on the amount of ITC that need to be reversed, that is TE now. E by F into TR equal to TE. On the TE, a person is liable to pay interest. Can you move forward? This sums up your Rule 43. Okay. Followed by, in case of a banking and financial company, an option is given to that banking and financial company, banking, non-banking finance company, financial institution, option is given. Option 1, reverse as per the above formula, Rule 42, Rule 43, read along with, Section 17.2, 17.3, read along with Rule 42 and 43. As per formula, you arrive every month at 2. Option 2, government will give one option. What is that option? Arrive your eligible ITC. Yes, sir, arrived. Eligible ITC into 50%. Matter ends there. Sir, what is eligible ITC? Commonly used for both taxable supply, exempted supply, exclusively used for only taxable supply, cross charge. Add all these three numbers into 50% will be value of your eligible credit. Where it is told, a particular rule is there, Rule 38 comes out and says, in case of banking and financial company, they have the option. Once they exercise that option, during the year, they cannot change. And for them, they can arrive this number by arriving only one model, which will be what? They will claim credit only for taxable supply or common supply of what input services, capital goods. That is, if they buy a router, that router is used for taxable supply as a router is used for exempted supply. They'll take 50% credit. Anything exclusively used for exempted supply, no credit. Anything exclusively used for exempted supply, no credit. Anything is ineligible, no credit. It will not come to that eligible ITC. Can you understand? Eligible ITC is what means exclusively for taxable supply, commonly used for taxable supply and exempted supply, plus 100%, 100% of your cross charge. This 2 into 50% eligible ITC plus 100% of cross charge will make the total amount of eligible credit as per Rule 38. Okay. So these are all Section 70. I have a very big package on my hand. Section 17.5 blocked credit. Okay. Due to paucity of time, and by now we are at 120. So I'll do one thing. At this level, I'm stopping today's discussion. Okay. We have a lot more to discuss. Maybe tomorrow's whole day also can go on ITC because we have to discuss 17, 18, 19, or we will discuss and our last half an hour or 40 minutes, 45 minutes, we may discuss registration. But somehow we have to package it and go like this only. We'll have some carry forward. I want a clarity, time, bandwidth. Morning we spent some 20 minutes on bandwidth issues itself. Thank God, touchwood, things went on well post on the second session. So we'll do one thing. We'll wind up today's discussion at this level. Share with your friends. Hope you're all enjoying the session. If you're enjoying a session, give your small thumbs up. It will motivate us. If you have any doubts, you can give it on the comment section. We're also planning for, the channel is planning for a web page to take queries, comments, and feedbacks. Once it is live, up and running, we'll ask them to share those information also to you. If that's for the day, thank you. Enjoy. We'll meet you tomorrow at 10 o'clock, same time, on continuation of ITC, blocked credit, and proceeding with the procedural discussions. Until then, signing off. Jai Hind.